Good afternoon, everyone. Today, we're going to do adjusted trial balance, part 2. Again, adjusted trial balance, part 2. So last class, we did adjusted trial balance, where we talked a little bit about the unadjusted trial balance. Then we talked a little about the adjusting entries. And who does the adjusting entries? An accountant would usually do the adjusting entries. A tax preparer may do the adjusted entries if they're trying to do the tax returns for the client. And then you do the final adjusted trial balance. Just to remember, when you're doing accounting, you always have a chart of account, 1 for assets, 2 for liabilities, 3 for equity, 4 for income, and 5 for expenses. And we always to follow what we call the dealer, right? So these are some of the things that you need to make sure you know in accounting. So we talked a bit about the adjusted trial balance. The adjusted trial balance is the list of all the final balances and all the adjustments have been made. A list of all the final balances in all the accounts where all the adjustments have been made. Now, in this, you need some data. What are the data needed that you need to give to the accountant, or the accountant usually knows? So we have a few examples here, 4 or 5 here to be exact, that we are going to talk about. We have unbilled fees. So we may have some clients that we've been working with, but we haven't gotten money from them yet, right? So they are unbilled fees. Then we have some unearned fees. That means we collected some job money already, but the job is not final. Then we also have depreciation. So depreciation comes about when you have something that loses value over time. Have you ever bought a car? And they said, oh, by the time you leave the dealer, then the value goes down. What do they mean? It means it depreciates. Everybody got that? Cars depreciate, equipment depreciate, computers depreciate. So depreciate means to lower in value. It goes lower. Every year, it depreciates, okay? Then you may have some people that you have some wages to pay, maybe $100, $200, $500, depends on who you have, the laborers here and there. And you need to pay them money. So do you pay them money every day? Some jobs, yes. They won't pay every day. Soon as they finish doing the lawn, they want the money. But in some jobs, you work until paycheck. And some paychecks are weekly, some paychecks are weekly, some paychecks are monthly, and in some countries, monthly, right? Yeah, we talk about those some Spanish countries that you have to learn to budget because you only get paid monthly, weekly, bi-weekly, monthly. Those are some, and some people want to get paid daily, right? So, but when you have wages accrued, but they are not yet paid, then they're also part of adjusted entries. So let's go ahead and look at an example. Here we have unbilled fees at July 30. Yeah, today, July 30 at $15,000. Supplies on hand at July 30. Now, in accounting, yes, if you have a supplies is treated as an asset. So yes, you take it down and you do it every time when you do your inventory. But now, in real life, many people just go to the dollar store, go to the nearest store, buy the 2 pence pencils, etc. And that's how they handle their supplies. But in some companies, yes, you're going to have some supplies on hand that you're going to do adjusted interest. I know you're going to say, Teacher Dean, but we don't do supplies like that in real life. Yes, some people do it where they have it, then as they use it, we have a countdown of inventory, etc. But in small business and in some things, we don't actually do the supplies on hand because we buy the supplies as we go along. I got it. Rent expired, that's another one. Yes, I know you say to me, Teacher Dean, who has a rent that is going to expire? Who pays their whole month for a whole year? So you may pay rent from month to month, but there are companies that pays their rent upfront, and as it comes and it expires, then you go ahead and you bill it. Insurance, everybody knows how to pay insurance. So insurance can become expired. You can pay your insurance 6 months ahead, to Progressive, to whatever companies you pay to Ocean Casualty, whatever company you pay your insurance to, you can prepaid. And then for that company, you can do some journal entries when it becomes used up. Everybody got that? Make sure you write it down. Thank you. Now, you have depreciation as we talk about. Things depreciate in business. Your equipment, your car, things that you have depreciate in business. And for this entry, we have 9,850. You also have unearned fees. Yes, you're in some business, you have to get money up front. In construction, you better get your money up front before you start that job. Some people will never pay you. In mechanics, same thing. Get the money up front so you can get your supplies, you can get your labor done, because some people won't pay you. And then you have the other hand where sometimes the contractor or the mechanic also is cheating you, right? So you have it in both sides. Irrespective, we're here to talk about journal entries. So we also here have wages accrued, but we're not going to pay them until the end of today, July 30, and then it lands into the account July 31st. Maybe we're not going to pay them until another time. Everybody got that? So these are the transactions that we're going to go over quickly in journal entries. And remember, accountants usually do the journal entries. The tax preparer, expert tax preparers, enrolled agents, those kind of guys will do the journal entries so that the books can be good, organized, and ready for year end and for tax preparation. So let's go ahead and look at these entries. Unbilled fees at July 30, $15,000. What do we have? Oops, I forgot a zero right here. So it's $15,000 for accounts receivable, and fees earned will be $15,000. There's an extra zero missing. So if we have supplies that are expired in the business, what do? We would have supplies expense, and then we have supplies. If we have depreciation, and if you go back to the slide, depreciation is 9,850. How do we journalize it? We debit depreciation expense and we credit accumulated depreciation. Now let's go back to the slide. We have unearned fees for $100. And how do we record it? We would record it as a journal entry, unearned fees $100, and then fees earned for $100. Everybody sees that? Thank you. Now, let's look at wages payable. How much do we have for wages payable? Wages accrued is $500. And how do we record the wages? We do wages expense as a debit for $500. And then we have wages payable for $500. So let's go ahead and go over the entries. The first one is what? Money, unbilled fees of $15,000. Everybody see that? The first thing that we do, we debit the accounts receivable for $15,000 and we credit the fees earned for $15,000. Everybody got that? Why? Because the amount is sitting in accounts receivable and we have not gotten paid from those customers. If we have supplies on hand, what do we record? We record supplies expense, and then we record supplies. If we have depreciation, where money is being depreciated over time, and every year we have depreciation expense for $9,850. How are we going to record it, everyone? We debit? Ah, yes, depreciation expense. And we credit? Yes, accumulated depreciation. Excellent answers, everyone. Now, let's go ahead and look at our unearned fees. How much do we have for unearned fees? $100. How do we report our unearned fees? What do we debit? Unearned fees for $100, and we credit fees earned for $100. So let's try the last one again. Wages accrued but not paid on July 34, $500.